Hi, everyone. Thank you for joining this webinar. My name is Camille, and I am glad to welcome you to this session. Before we dive in, please note that you are watching a live webinar and that this session is being recorded for those who might miss it. The microphones for the attendees will be disabled during the meeting, but you are welcome to submit questions using the Q&A window. And without any further delay, it is my pleasure to introduce the moderator for this webinar. Please welcome Paul Landy. Paul?
Thank you. Appreciate your time, everyone, today. Really excited to be here today with our partners from Alpha and Petra, going through some benefits of fund administration, some trends, some current topics around technology. Also with us is the head of our product for private capital suite, Farhat. I'm Paul Landy. I've been with FIS a little bit more than 9 years at this point, but my journey in private equity started as a fund admin in Philadelphia using Investran. So I've got a long kind of history with the product. I'll let everyone introduce themselves, starting from Farhat across to Matt, then Josh and Adam, and then we'll get into the topic. Sound good?
Sounds good. Sounds good. Thank you, Paul. Hello, everyone. My name is Farhad Ansari. As Paul said, I head Investran at FIS. I have been in a fund accounting business for last 18 plus years, starting my journey in the traditional fund space before transitioning into the alternative space in recent years, which is actually perfect because I'm seeing similarities. I call deja vu moments. What happened, what I saw firsthand experience in the traditional space compared to what's happening right now in private equity, especially around fund administrators. And then I'll hand it over to, I believe, Matt.
Yeah, thanks, Farhat and Paul. Good to see everyone today. Looking forward to a thoughtful discussion here over the next hour or so. Matt Semenza, I'm a partner here at Alpha Alternatives. I oversee our North America finance and operations practice, so really focused on everything back office, partnership accounting, fund accounting, management company accounting, AP, treasury, et cetera. I also started my career in the fund administration business with JP Morgan and Bank of New York Mellon before coming over to Alpha, formerly Lion Point, and looking forward to the topics we're going to discuss here today.
Great. I'll toss it over to our partners at Petra.
I'll start. Hey, hi, everybody. I'm Josh Cooper, Managing Director of Operations here at Petra. Been in the fund administration, GP back office, what have you, private equity industry for a tad over 20 years now. I was fortunate enough to be involved in what we'll call kind of the original group that helped launch Petra from where it started to what it is today. And as part of that, I'll hand it over to another key figure within Petra, someone who helps us a lot on the credit side. Great book of business over there, Adam.
Yeah, thanks, Josh, and thanks, everyone. As Josh mentioned, I also work at Petra. I'm managing director, the head of credit. I've been with the firm since we were founded about 4 years ago, same as Josh. Prior to that, I was the COO of credit at Riverstone Holdings, and I'd worked for about a decade before that within credit operations at hedge funds. I'm looking forward to the discussion today.
Perfect. Thanks for everyone's introduction there. We have a great panel. Josh, I'm going to start with you with some current trends. If you think about, like you just said, private credit wing and or arm of Petra, right? There's a lot of significant things happening in fund administration.
Absolutely.
What are you looking at today?
Well, I think, kind of to addend in what you were just saying, it's this variability, and there's, different options, and there's a lot of different, markets, different segments, different types of funds being launched. And so, I think one of the important things we're doing is, the idea of co-sourcing and a lot of that, the idea of lift outs as well. So, one where you're kind of tag teaming and the other one where you're just kind of resourcing out the whole back office from a larger fund. Maybe it's dispersing, maybe it's just looking to cut costs and kind of putting those books over onto a fund administrator side. Really no change from the individuals that were working at the fund, just kind of joining a new company, new feel and opportunity, I guess you could say. So it's just having that options to be able to do different things along what we'll call traditional fund administration, and having more, we're getting a lot of questions about how we're putting AI into fund administration. So I think that's a lot of the recent topics that have been coming in recently. AI is all over the world now, so obviously it's going to make its way into fund administration. And so I think it's kind of staying on top of that and finding good ways to integrate that. Certainly where we are now and in times of whatnot, cybersecurity, data privacy, that's, hotter than ever right now. So robust cybersecurity and data privacy frameworks are pretty much essential to protect sensitive information in fund and admin. So really hot topic, something you have to think about risk management before you have any decision you make now. And I think a key takeaway in terms of what that tech might be offering, along with data portals and whatnot that have been around, there's a strong push for people seeing identifiable waterfall software modeling. And so I think that's a core concept that's been around for a while, but I think people are gaining trust in some of the ingenuity that's gone into that. And Petra is looking to continue to explore some of those things as well.
Great. Yeah, that's a significant lift, right? And I think you mentioned partners and needing assistance, right? Because clients need to understand what their roadmap needs to look like. Matt, I know that's one of your key roles, and in identifying some of those trends that Josh was talking about. Or anything you're seeing from your perspective as a consulting partner?
Yeah, absolutely. So I'd say, from a GP perspective, more and more firms reaching out, looking to really lean into their service providers in order to effectively scale their businesses. As the industry and these firms continue to grow, we've had quite a few GPs reaching out, just looking to, for help defining what their target operating model looks like, but with specific emphasis on sort of the back and middle office and leaning into their outsourced service providers. So they're really looking to understand, what functions do we outsource? What functions do we keep in house? How do we go about selecting a service provider? What type of location strategy do we deploy for the teams that we are going to keep in house? And then when we do outsource certain functions, what's the right oversight model, right? What does the right oversight model look like, and what technologies are out there in the market to really enable that? I mean, I think the punchline is GPs are looking to grow their AUM at a quicker rate than they're looking to grow their headcount, right? So leaning into technology and leaning into service providers are two main ways for them to accomplish that.
That's great. Yeah, that's a trend we're hearing on our side as well. And I think, Adam, you're seeing a different side of the house at Petra. What trends are you seeing on your end?
Yeah, sure. And I think within, credit, especially in the last few years, there's been a volume of new participants. There's been more capital. That's definitely put pressure as there's additional types of structures and additional types of investors. Really a push towards retail investors, liquidity, evergreen structures, and different deviations of that. I think there are definitely some operational challenges that come with that. So really making sure that you're thinking about that as you bring on new strategies, new structures, what you actually have to do on the back and middle office to make sure that you're setting it up to be scalable. Also, I would say just in general with LPs, we've seen a continued push towards more reporting, more transparency needs. And on the fund administration side, as we get a lot of those data requests, not just doing one request and moving on, but really making sure that we're putting processes and the right technology so that it can be a scalable approach as investors continue to build out their needs. So it's something that you're not just thinking about how you can help today, but really thinking about that model in 3 to 5 years, how you could put the right pieces in place today.
Yeah, that's as you said that, I was thinking about all of the different hybrid funds that we've been hearing about. Hybrid has become a hybrid thing in that sense of the word, right? So really, I sympathize with what you're saying there, and I know Farhat is running our private capital business, Investran. He comes from that world originally, right, from the more liquid side of the house. He's no longer afraid of commitment. He's now come over to private equity versus the traditional subscription side of the house, right? So Farhat, significant trends in fund admin that you're seeing now as you've moved and changed roles here within FIS.
By the way, Paul, that was my joke. You just
I know, I
took
stole
away from me. But again, from a tech vendor perspective, particularly, we work very closely with our partners, fund administrators. I am seeing multiple trends that's shaping the space. First one, what we are seeing is demand for automation, straight through STP, straight through processing. Fund admins, and everyone over here knows that they are under great pressure to do more with less, right? And they are focusing strongly on automating day-to-day activities like capital calls, distributions, NAV-CACs, reconciliations, and everything else. And what we did within FIS is to really focus on operational capabilities and evolve that, embedding a workflow solution that is not just focusing on a back office, focusing on through the whole ecosystem. Another thing is what we are seeing in the private equity space is revolutionizing how accountants work day to day with their activities as well, leveraging exception management like systems where previous to that, a lot of the work was done extracting a lot of data, macros, VBs, to actually identifying those discrete accounting conditions. Now, instead of doing all that, using exception-based systems and using the new technologies, I think, Josh, you were talking about AI on top of it. Another thing that we are seeing is we cannot talk about trends over here without data, right? Fund admins are moving simply from back office transaction processing teams to data stewards for LPs and GPs. And many of my discussions that I had with fund admins is unified data models. So thinking about how to bring data in a unified data model and integrating through APIs. Everybody in here, REST is the standard. Everybody knows in here REST is the standard, but not just using REST, but easily plug and playing your APIs with the vendors, and also delivering actionable insights, not just reports. Paul, you were just talking about the hybrid structures. We were just together in London. Majority of the questions in the London conference came in from hybrid structures. They got LTAF, LTIFs, different type of interval funds coming in, basically blending these asset types, and entry points and exit points are kind of changing because of liquidity standards. Fund administrators right now looking at how to solve this problem. And this is basically a major driver for us at FIS to innovate our platforms and puts FIS in a great place, to be honest with you, because we had the traditional space, we have the private equity space. How do we bring these products together to serve and close this gap and answer this question? And the last one is, I believe, Adam, you were talking about LP expectations are extremely shifting right now. They are looking for very similar to traditional side, institutional grade service. So interacting with LPs over maybe quarter ends are gone now. So they are looking for real-time data access. And what we are seeing from technology perspective is these cloud-based databases like a Snowflake, which majority of our clients are using, becoming more and more popular for data access.
Yeah, that's all extremely important, right, for our clients and obviously the underlying clients of Petra and Alpha. Josh, not to date us, too much about how long we've been in the fund admin space, but if you could think about these changes that we're looking at, how have you seen fund admin change? There was definitely a shift, right, where everyone wanted everything to be back office, in-house, our own servers, our own rack space, all of our data in-house, and regulatory changes and just overall LP sentiment has definitely had fund admin come to the forefront. But what have you seen evolve over the last 10 years as people have been adopting the fund admin model?
Yeah, thanks, Paul. What I think seeing the most, and it's just, you can't really avoid it because you're seeing the same people that have been around you for a long time. And what that really coincides is with experience and credibility. And so I think that a lot of people have been in this recognized field, which wasn't recognized a long time ago, right? So as it's gaining credibility, experience is coming with that. So to me, the last decade has seen a rise in credibility, expertise, and that's really significant, impacting a lot of the different sectors involved in private equity and fund management. Along with that, as we have new technology coming into space, if obviously the trends as Farah was alluding to before, technology investments have enabled, cost-effective ways to drive advanced tools, specialized reporting needs. And so, not just with the expertise and credibility, but having the expertise to seek out these advancements in technology and having the want and need to kind of integrate them. And, I think the new rise in expertise is bringing people that have a higher interest in some of these things that are coming out instead of what we'll call like an old guard, so to speak. And, what comes with that, I think we're seeing more qualified experts, so people that were years ago were maybe managers in a firm are now getting to the directors and senior director levels and being able to make qualified decisions because it's based on real-time experience, right? So, trying to evolve and re-strategize and redirect your points of concept, around really mistakes that have been made, right? I mean, you don't go to college for this, is what I like to say a lot of the time. And so your first 4 years out is really your college experience of trying to learn what this business is. I like to joke that the word waterfall is thrown around offices and you learn an LPA, but the word waterfall isn't in an LPA, right? So there's a lot of rhetoric. There's a lot of, generic terms that aren't known outside of the world. A lot of people, when you tell them what we do, they just say, can you do your taxes, right? So it's just really been this kind of blind faith in what we do. I think that blind faith has become more recognizable. And so since there's more qualified experts, understanding better technology, they're in a place where they have more credibility. I think that's led to an evolving service model, right? And so being able to evolve your service model because there's more technique coming in. Let's add a compliance aspect. Let's add a data integration aspect. Let's really hammer on an onboarding concept and how we leverage certain automation to qualify that experience for your investors and the LPs behind that fund management side. And so I think there's a rise in when you're working with a new client or whatnot, knowing who that person is. Right. So I think people really want to see who's on the other side of that phone and know that it's, it really is building a pure relationship because they really want to be guided at this point. Paul, to your point, they're not just handing it off to a back office and saying, give it to me when you're done. We're trying to make it a more cohesive, integrated relationship.
That's a great set of kind of background on the qualified expert. I actually worked for a qualified expert, my CFO, Eric Emmerich. He was fantastic. He came from a big tax background, and I was very frustrated in my first year working under him because I just didn't understand everything conceptually immediately. I was doing a lot of Investopedia and Googling, right? So, it's one of those things where you have to be in the click, like you're saying, to get it. He used to tell me, give me 3 audits and then you'll be a confident expert and you'll understand what's going on by the 3rd audit. And that was one of those eye-opening experiences for me, thinking that I could pick things up pretty quickly. It's one of those things that change rapidly. So Matt,
Absolutely.
You and I have worked more than 10 years together, if you think about it. And I know you're a qualified expert in this space too. What have you been seeing, in the evolution space as you're handling this from a consulting side of things?
Yeah, I think, if you think about looking backwards 10 years, there's way more options, right? Both in terms of service providers, there are a number of new boutique service providers sort of popping up over the past 10 or so years, ton of consolidation in the service provider space. A lot of these large fund administrators, it seems like every 2-3 weeks they're acquiring another one. So a ton of consolidation. But then on the technology side, same idea, right? If you look back 10 years ago at across the different functions, right? Portfolio monitoring, fund accounting, deal pipeline, there were probably 1 or 2 options in each of those categories. Now there's probably 10 plus, right? The landscape has changed a great amount. So I think we're helping a lot of private markets firms really go through detailed evaluation processes, both on the technology side, but also on the service provider side. So, it's a good problem to have, right? More options is better, but a lot of clients are coming to us and saying, where do I start, right? There's 50 different solutions that can do some of these things, or say that they can at least, right? What's real, what's not, where do I start? So that's a lot of what we've been seeing.
Yeah, it's a playbook that you provide, right? You start with that, where do I start, by doing that backwards. Well, what is your endpoint? I know that's part of your process for sure. So yeah, that's a key piece, right? You have to understand the client's needs, but then ultimately, where do they want to go and what's that endpoint? And then you can develop that roadmap for them. Adam, same thing. What are you seeing evolution over the last 10 years in our space?
Sure. I think one thing that can't ignore is really the focus on cybersecurity and data privacy, as there has obviously been more issues, things that have come up that put this in focus. So I think, especially with various models, really making sure you have a provider who understands the control structure that you have in-house is really important, and making sure that you understand their controls, how it's being tested, how it's being, how there's oversight. I think that's really important. I'd also say specifically within credit, really the rise, not just on the accounting side, but the operational support and embedding that within the fund administration offering. I'd say that's really come up as there's been hedge funds, private equity firms that have expanded in the last few years into, the private credit landscape. Having the ability to understand how operations, which in some think of as more of a catch-all, but then some, when it's really used properly and you have people who understand the dialect of how the investment team's discussing potential deals and really helping to be a liaison with the accounting team, that really helps to make sure that things flow seamlessly. And I think that's continued to expand in the last 5 years to really, Josh mentioned, having experts who understand that focus specifically, adding that to an accounting and administrative offering, that makes it really powerful and has kind of a full middle office and back office offering. And the last thing I'll say, which I know it's been mentioned, but just flexibility. I'd say, we see more often periods of increased volume during the audit, during other periods of fundraising, and really making sure you have a model that you can support, day in and day out. And when things get really busy, how do you make sure that you could really increase the support that you can handle those periods? And I think making sure you're thinking of it the right way, that's really a way to make sure your model's efficient and that you could support new business lines, new products, and growth down the line.
Yeah, that's all key points, right? You hit it right on the head too with the flexibility angle. You have to have that scalable model, but every client has their own needs, right? So makes sense. I'm going to throw this one to both Josh and Farhad as their positions give them, that bird's eye view across their organization, but also in a macroeconomic sense. What are you first, Josh? What are you seeing just from a macro perspective with the turbulent world, things that are going on? Anything currently affecting fund admin from the macro influence?
Sure. I mean, so, one we've already mentioned, right? And, that's kind of what's a macro trend in itself, right? So, co-sourcing and automation, right? So that's a big shift to, the lift to co-sourcing, automation, trying to transform business processes, making them more efficient, making them customizable, to speak for specific needs and whatnot. That's a big push now. And it's, really, could be impact from inflation, regulatory standards and whatnot. So, when inflation isn't, affecting assets or valuations in a specific way, we have to speed up the way we're, pushing things out. The regulatory standards are making us have to move faster, constant changes in marks because of, a putback or something, or a cut on a margin, whatever the case may be. So you have to reprise these valuation models, which are actually becoming, more involved, right? There's more seeds in play. And so there's more aspects, there's different groups in which different limited partners and sitting inside of a fund, side letter needs and whatnot. So there's just a lot of variation from some of these regulatory standards that have us to kind of have to do more work with the same amount of timelines. It's actually more work with less timeline kind of now is what it feels like sometimes,
Right.
Which is why that push is so impactful. Same thing with like interest rates and monetary policy. You think of Adam in the credit side, monetary policies play a crucial role in asset evaluation. And when you're trying to make monthly or quarterly distributions where people are waiting on those, small impactful margins and overages, that's not a long hold, right? So there's impatience in even getting money out quicker to people. And, I mentioned it at the beginning, but that integrated waterfall modeling, because as far as we want to be particular and accurate for all these changing needs, you often get the call to arms of someone just being able to sit on their side as a fund manager and quite frankly not want to be checking in a lot with all these constant needs. So by developing that integration and the modeling, by able to get them their answers quickly for whatever it may be, a board meeting, an advisory committee meeting. So I just think, because the need for more information faster to do more things with it. It requires us to do a lot more things faster. And so I think that's been a big impact, which pushes to, cost cutting, finding better ways to, automate technology, et cetera.
Right. There's a cost cutting aspect you said at the end there, right? Everyone wants their data because it's their data, but they want it for free. And that's not necessarily scalable for providers always. So there's a give and take on that technology integration and how we can do things. So Farhad, is that what you're seeing? I know everyone's trying to suppress cost. What's your
Absolutely.
macroeconomic trend, right?
Yes, fee compression, margin pressures, they are constantly going on. And again, when we start to look at macro trends, the first one is, as Josh said, uncertainty. There's economical environment where administrators are looked to do more frequent valuations, real-time cash analysis, liquidity tracking. Those needs to be done. And what admins are doing is looking at technology vendors like us to provide the flexibility and speeding up managing these type of demands. Talking about the cost pressures, right? GPs face significant cost pressures. Is pushed to the fund administrators, and they need to do more with a lower cost. This is driving fund admins towards automation, as I was saying earlier, co-sourcing models, as Josh was brought up as well, technology-enabled operational to enable more efficiency into fund administration. I think another one that is very important is cybersecurity. Geopolitical tensions cause significant amount of cybersecurity concerns. I just read an article recently, cybersecurity attacks increased 75% since Q3 2024. So with more focus on cybersecurity, and LPs and GPs are looking into how fund admins are actually managing this risk at the end of the day. And the last one we didn't mention actually is the micro trends wise is the growth, right? Within the private capital, it's growing exponentially. What new assets types are private credit, which will be what $3 trillion asset type coming up by 2030. So focusing on those, and also the hybrid funds that we just talked about as a micro trend.
Correct. Yeah. And another trend, so a trend I heard a lot there, and Josh mentioned it in the macro and micro. So I'll throw this to Adam because I want to get the service provider perspective, and then maybe we'll go to Matt. Co-sourcing, it's more popular. How are you supporting this model from your seat as an admin?
Yeah, sure. And I think as it's been mentioned, it's definitely something that we get asked about often and is usually a strategic that comes up with larger GPs. But I'll say that the first step with it is it's really the requirement to be really transparent and to make sure that senior leaders at both firms are setting clear objectives of what the intention is. From a technology point of view, what the existing technology stack is in-house, how it can be leveraged, how we can make sure that we have people with the right expertise to know what the ultimate goal of using the co-sourcing relationship is. And then sometimes we go about having a whiteboard session where we lay out specific goals, milestones, the objectives. It's really making sure that everyone knows what the ultimate goal is, because I think that's how you make sure, do you have the right technology? Do you have the right expertise? Are you bringing the right people into the mix? And once you really set that out, then you have a clear roadmap of this is what we're going to do. This is how long it's going to take. And this is how you can tell if putting KPIs along the way, have you been meeting the indicators and performance that you expect? And I think that really also ensures there's alignment. And sometimes it's really to have the mentality that you need to be a little bit flexible here in terms of, you may think that the technology or people will get you to what you want. But once you actually really start diving in, that's where we think on, from a support point of view, we can help to identify where we've had success in supplementing. Sometimes we do it across specific processes. Sometimes we do it across specific funds or fund families. So it's not always this one size fits all. It's really laying out what the specific and unique approach for that firm is, how we can help in what they're looking to solve. And then we could kind of leverage our network and, people that we believe are experts in this space to make sure that we're bringing in the right team to really approach it in a holistic way.
Yeah, that's great, man. Matt, thinking what Adam just said there, right? There's experts in this space, the roadmap that needs to be defined during that co-sourcing model. What are you doing, from a service provider's perspective to help support co-sourcing today for your clients?
Yeah, so I'd say from our perspective, we've seen a pretty big uptick in it. I think generally I'm a big fan of the model. I think it's a model that can benefit both the asset manager, the GP, and the fund administrator. What I really like about it is obviously it allows both firms to operate within the same technology systems or technology ecosystem, which really helps solve a lot of the challenges around things like shadow accounting, right? It kind of gives you your answer right there. You're all operating in the same platform. Both teams can log in. Fund administrator can do sort of the day-to-day operational work, and the GP can provide the right level of oversight that's necessary because ultimately they, as the asset manager, are the people that are responsible for the figures, numbers, and reports that are going out the door. Also a big fan of it because it allows GPs to integrate, whatever functions they're co-sourcing with the rest of their technology stack, right? So things like their CRM, their portfolio monitoring system, other technologies that they may not be outsourcing the functions for, they can still build those integrations for internally. So personally, I'm generally a pretty big fan of it. On the flip side, though, it does still require the GP to spend and invest in technology, right? They need to go license the software, they need to maintain it, they need to do the upgrades, all that sort of stuff. So, it's a double-edged sword. There's, without questions, pros and cons. It's not the right answer for everybody, but
Yeah.
I'd say broadly speaking, we've seen a pretty big uptick in firms moving to that model.
Yeah, and I mean that's a great point, Matt. Not everyone fits into a cookie cutter mold with any of these solutions, right? Josh, from the admin's perspective, and I'll let Adam answer some of this too. I'll start with you, Josh. As you both sit in that fund admin side, as you think about and hear what Matt just said, the costs and benefit implications of running that co-sourcing model. How do you look at that from an admin's perspective? I'll start with you, Josh.
Yeah, absolutely. So, I mean, from an admin standpoint, I think what working with, certain different clients and trying to find different co-sourcing models that make sense, but, it avoids infrastructure and investments. So co-sourcing models, firms are able to avoid costly infrastructure investments and leveraging vendor resources and our technology platforms. By over time, by reallocating costs, it can reduce internal staff expenses. So co-sourcing can often reduce internal staff expenses, which can increase in vendor fees and some of those integration costs. But, I think, net over net, it tends to be a benefit over time. It does lay, a more recognizable, predictable cost structure a lot of the time. So, these are guided by SLAs. So that's going to ensure that predictability, scalability on cost structures, the financial stability, that allows people to not think about a lot of triggers and reconciling, CFOs reconciling quarterly billing from, a vendor or a third party that they're working with is probably not the best use of their time. So kind of evening that out and having a leverage over what that's going to look long term. Again, selecting cost savings through targeted efficiency. So maybe want to do a full fund admin scope. Maybe you just want a management company concept, or you're just looking to get into maybe waterfall reporting. So by being selective, you can have cost savings through what you're co-sourcing out. The access to get to the specialized expertise and the technology that comes with it. So, when we really say co-sourcing, it's putting the best people in the right seats to survive and do the right thing to win. And so, when you're at a fund manager, maybe knowing what the best tech out there and having access to that or who's going to use it, that should be able to facilitate the decision making on the other side. It shouldn't be their day-to-day job, right? So, that really can reduce mitigated risk from the operational resilience, right? And so there's a trade-off in some of the control and transparency, but again, guided by SLAs and making sure that there's a full, I think there's an advancement in the DDQs that we see a lot nowadays too as well. So just really vetting the admins before you're going into any sort of specialized business with them, targeting the right cost savings through efficiency, and just kind of weighing in the cost increase on vendor fees and positioning yourself for flexibility in your operations.
Yeah, and Adam, same question to you, but as you see it from the credit side, any savings or cost benefit implications when you co-source on the private credit side of the house from an admin's perspective?
Yeah, I think it's interesting that, as Josh mentioned, on looking at from a fee, a strategic, and Matt mentioned same call side from potentially removing a shadow accounting need. I think it's really trying to solve to get that efficient, scalable business model. And co-sourcing also really helps for real time to see results in more of a near-term phase. And I think that's really important, where you could see, as Josh mentioned, if it's management company or if it's a certain function, you could really come up with that plan and that focus right away. And it could be more of a short-term pressure that the team's experiencing that you could help to alleviate. But while doing that, you could kind of also look in the background on a longer term, where do we want to get there? So it gives you a little bit more flexibility. And I think within, credit specifically is a lot of, in the last 3 to 5 years, as funds have been raising larger pockets of capital and they've been hiring larger staffs in-house, it kind of gives them an inflection point to say, is this the right model? Or even if I need time to think about what the right model is, co-sourcing presents kind of a unique opportunity where I could keep my technology stack as it is today. I could supplement and alleviate some pain points that the team's existing with today, and then really think about the long term as you're helping with some of the short term things right now.
Yeah, that's good. That's good insight for sure. As Matt talked a little bit earlier there around some of those non-cookie cutter models, going along the same vein as co-sourcing, shadow accounting is a hot topic too that I've been hearing about. Matt, I know you're helping GPs pick the right playbook and LPs, right? Pick the right playbook for shadow accounting and doing what they do. What are some of the challenges, or could you give me some of the flavors that you're seeing of what's occurring in that space for shadow accounting and how you're assisting clients today?
Yeah, this is fresh in my head because I just wrote an article on it actually. But yeah, I mean, I think again, there's no one size fits all solution. I would say, generally speaking, with some of the more liquid strategies, credit, hedge, etc., we more typically will see some variety of a full shadow because there's higher volume, right? There's more trades being processed, there's more to reconcile, etc. Yeah, in the pure private equity space, bit of a mixed bag. We absolutely have clients that still do a full shadow. Is that the right answer or right solution? Sometimes. We generally feel like for pure private equity firms that it can be a bit of overkill, right? It's all about balancing that balancing act of making sure that everything that goes out the door in terms of your reporting to your LPs, et cetera, is right and correct, but also limiting the redundancy in the work, right? Does every single journal entry need to be booked by both your fund administrator and your internal accounting team in separate systems? Probably not the most efficient model. So we see everything from full shadow to limited shadow and everything in between. I'd say, generally speaking, we encourage our clients to, replicate certain things, right? Your management fee calc, maybe your waterfall. You might want to shadow some of those really big ticket items, but do you need to book $5 in bank interest every month into your own system? Probably not. So it's really about finding the right balancing act. Everyone has a different appetite for risk. Everyone has a different level of complexity in terms of their funds, their structures, the assets that they're trading, et cetera.
Mhm.
That's a great point. And like you said, I hear a challenge there. What data to aggregate, where to do that hybrid. Obviously, you need the cash flows, especially when you're talking waterfall or some of those nuance offsets when you're talking management fees. So, Farhad, I know you and I talk about this from our roadmap perspective all the time, co-sourcing shadow, and how do we fit the tools into what we're building on our side. So can you touch on what you're thinking about from a co-sourcing perspective and a shadow accounting perspective?
Yeah, absolutely. Unlike Matt, I did not write an article on shadow accounting, but we do see a significant shadow accounting is significantly important, and it plays a really important critical role, especially when GPs are looking into validating fund admin's outputs. So before we go to the challenges, like how they are managing, I agree with everyone over here. We see a significant uptake, especially in the US, on GP is adopting co-sourcing models where shadow accounting is no longer separate, it's just integrated with what they are doing with fund admins. And what we are seeing is they are leveraging technology to share data, workflows, and everything around shadow. The challenges wise, what I'm seeing is with shadow accounting is, it's already been mentioned a couple of times, is it's not easy. Resource intensity wise, it's a lot of resources that we need to put in, or GPs needs to put in for shadow accounting, especially with the hybrids that you were just mentioning. Shadowing those complex structure means significant SME knowledge within the organization, GP's organization. Another one that we are seeing is data consistency and integration wise. Ensuring the GP and fund admin systems are properly synced is a nightmare. Mismatched data, mismatched timing, data standards, mismatched calculation creates significant amount of recon errors, and which is a nightmare to actually close. But what we are seeing is shared access through a single application layer. With the goal with co-sourcing helps close this challenge at the end of the day. They're focusing on configurable users within the single application, permissions and data views, so both GP and fund admins can actually operate with maintaining clear boundaries of roles and responsibilities. With the swim lanes, is closing that gap. And the last one is mentioned, as I said earlier as well, is there's cost pressures and from LPs to GPs, the fund admins, and GPs needs to do an ROI analysis of the benefits of shadow accounting at the end of the day.
Yeah, and Adam, I think, from an admin's perspective, I'd love to hear, how do you look at this differently from a co-sourcing when you think about shadowing? Are there challenges from your side? Is there anything you see that are more challenging for the clients when they're looking to shadow versus maybe co-source?
Yeah, I think we view it more what's important is really having a proper oversight model and really having trust of the underlying data. Because when you build that out and you spend the time and the resources getting comfortable with the underlying where the data is coming in, there's less, which I think Matt and Farhad have alluded to, there's less of a need of doing the full shadow approach. And, we found clients to prefer and to have, there's some leverage and flexibility when they really focus more on what's the data, and we help and guide them on what checks are really important to them that they should be building out and making sure that they're comfortable with. And that's usually not doing a full mention, booking everything in terms of on the deal activity side, expenses, running everything. It's more understanding what matters, what the LPs are typically asking them about, what they do feel comfortable outsourcing, what they feel comfortable keeping in-house, and really just coming up with the right oversight and who does what. And we found that that's been a little bit more strategic and helpful to clients, and that comes up a lot more often as, we found it to be a better cost model as well.
Yeah. And as you think about the cost model, this is all for the LP expectation at the end game, right? That at the end of the day, we're trying to meet the demands of the underlying investor, trying to get the cost down for them, trying to ultimately give more data to them. So I'll throw this to Josh first. What are the key demands that you're seeing, or what's that LP experience that they're expecting with a relationship to a fund admin today? Is that something you're seeing from a fund admin's perspective? How are you looking at that? Obviously, you could be servicing an LP that's a larger pension, but if you think about it, most of your relationships will be through a GP. Are you seeing anything there where there's LP expectations?
Yeah, for sure. I mean, outside of, of course, what's guided within, the framework of an LPA, you do see a lot of these special needs reporting, addendums, side letters. And, what we're trying to framework around is like not them being one-off. So, if one partner is using ILPA, it's just like, let's just try to, engineer a framework where it's all going to work that way, right? So, offer more rather than trying to specialize so much. And that way you kind of can set up your processes and workflows around that. And why I say that is where the expectations are right now. It's speed. I think they want speed more than anything now. It's a fast world. People love Amazon. People like having everything on demand. It's just the psychology of the world we live in. So business is going to have to follow suit to keep up. This one in particular, the needs of the limited partners, a lot of them are the people that help drive, the economy for lack of a better term, right? So we need to make sure that we're getting them their information fast. And with that, they want reliability and transparency. right? So they demand that really, in delivering fund reports, documentation, ensuring that the trust and confidence is there with the investments that they've made. Not making that you can't really fat finger anymore, big thumb, that kind of thing. There's a really refined effort that we need to put into this business now. I think really people are pushing harder on accurate and financial KPIs. So, they're really looking along with the financial statements, accurate KPIs, IRR, TDPI, DPI, MOIC, just to name a few. They really want more access to the performance and the health of the investments that they're investing in now. I'd say valuation and accounting expertise. So we mentioned it that kind of at the top of the call. So now that there is more expertise and there is more people out there that have a variety of skill sets that can benefit in this environment, the limited partners and the GPs want access to those people to make sure that they can get that reliability, the accuracy, the valuation expertise. And yeah, I mean, it's a timely support with seamless transition. So, LPs are seeking timeless support for portal issues. They expect seamless transitions when it becomes to admin changes, right? Even if you're going from one to another, they really want a fast, unbothered, smooth operational process, right? So I think the expectation is that for us to take accountability as the service provider and equip ourselves to offer them just that, right? So just smooth transitions through financial statements, postings, getting into data portals, all that kind of stuff. I think that's extremely important.
Yeah, I completely agree with that. And then if you think about Matt and your role, how your clients, how do you interact with those LPs? Are you working for, or doing projects that ultimately look to meet those LP expectations? How are you guys thinking about that?
Yeah, so a couple things. I think, from an LP perspective, I'd say they generally view it as a positive, right? When they know that their GP or asset manager is outsourcing to a best-in-class fund administrator. I think from their perspective, it really shows that the asset manager is focusing their time on their core competency, which is making investments and generating returns for them, the LP. We've got a webinar coming up in a couple weeks here focused on the investor experience, but we've been spending a ton of time with our GP clients, helping them really think through and improving their investor experience. So everything from, step one, the electronic subscription process and using new tools and technologies to help facilitate that, all the way through, to Josh's point, giving them access to more real-time reporting, right? So the capability to not just receive a PDF once a quarter, but log into a portal, run reports real time, slice and dice the data, download it, and kind of do whatever they need to do with it. But it's really about, improving the end-to-end investor experience process and giving them better transparency. I think regulation is also driving some of this as well. New ILPA changes going into effect, I think early next year. So we've been spending some time with our clients helping to, get them ready, get them prepared to provide that level of detailed, granular reporting. And I think the changes in ILPA really are an outcome to the fact that LPs have banded together and are looking for more standardization and more transparency.
Yeah, that's a huge point that you said that there, right? They're doing it en masse, so it's everyone is expecting the same thing. And I think, as we talked about this, technology is what we keep talking about as this facilitator. And so, Josh, I know you're on the leading edge of blockchain, AI, things that you're doing over at Petra for making fund admin 2.0 or 3.0, right? As we think about it from a web perspective. Sure. So can we talk about what that means to you?
Absolutely. I think we keep coming to that AI term, right? And it's just so ever present now. So, when you think about how we're integrating it, we pose our teams, and I think a lot of people do, and a lot of companies now, is to just kind of have it on the forefront of your mind, that what is available. I mean, we try to make sure that there's sort of a rope around where we're offering it and how we want to use it. We're going to be very careful about the risks that come with it and kind of mitigating those down. So we really just don't want a lot of like partner data being part of the forefront of how we're starting to do these integrations. I think it's more finding ways to automate things internally, classing up demos, right? Classing up shared materials, making sure that the spelling is right and that, it says investor services or not investor relations in the same deck, the same amount of accuracy and dependability that limited partners want on their portals. They should also want that prior to even, getting involved with a company like ours or any other administrator. So I think it's leveraging AI to kind of, I call it solving the in-between. So, you hear a lot of banging the table for it being the data entry or enhancing investor services or predictive analytics, which I think those are all things that we do want to continually move forward with. Workflow optimization, I think, is actually the one that makes the most sense to us. So something where we're just streamlining checklists, approval processes internally, right? So just making sure it's not an email, I didn't get that, integrating those types of things is very important right now. So, but, along with those things, I think, we are also trying to teach people that there's a lot of AI already embedded into your 365. There's to click the little thing on your PowerPoint presentation, ask Copilot. So, when we say, how are you integrating AI? I think we should just integrate it the same way you would at your house, right? How are you making your daily life easier? So I think the best way to integrate it, and I helped out Paul, a while ago at an FIS panel where we talked about AI specifically. And, I made the joke that it used to be Allen Iverson is how I knew AI, but that's not what everybody was there to talk about, right? So, I said the best way and one way that we've found it to be, helpful of how we're bringing and using AI is just talking about it. You have to socialize it. You kind of have to culturize it into the way you're operating business. You want to make it feel like it's not a nuanced tool that no one understands. And when can I use it? And when can I not use it? Kind of keep it innocuous, like just how should I fill out my timesheet this week? How should I ask a question to my manager? You know what I mean? Like use it for unsure situations that might not have a lot of like risk tied to them from a business concept. Just how can you work smarter along your day? I think that's some of the better ways to implement it, but along with automation and whatnot. But there's small ways to integrate it as well as larger, more beneficial ways in the long.
Yeah, not to go too deep on a basketball reference, but I guess AI is the answer, and it doesn't necessarily mean.
Wow!
Wow,
How did you come up with that, Paul?
It's good, right?
My goodness.
Come on,
That's amazing.
And that's on the fly,
round
guys.
of applause.
Yeah, Paul was a comedian before.
I was. Don't ever
still
look
is.
that up or Google that, anyone. So, Farhad, I know you've challenged our dev teams, right? In 2025, use AI. Find what we're going to do with AI and not just make it be a buzzword. So let's talk about that. What are you looking to do from the dev perspective on our side?
How much time do we have?
You've got 3 minutes max, but
3 minutes max. Again, I'll look into it differently. I'll look at it from a fund administrator perspective. And what we are seeing is definitely technology, emerging technology, especially moving from conceptual to a practical application phase, especially on AI. And the focus should be, and focus currently is driving efficiencies, accuracy, and transparency. Somebody told me with AI, try not to do more, but do better. I disagree with that. I think we need to do more and better at the same time with AI, and AI is definitely an enabler. So I'm seeing certain different areas, like you were saying, Paul, from development side, from technologies, trying to leverage AI to build things in a better way and faster pace so that leverage CI/CD and CI to actually deliver functionalities. But from the fund admin perspective, what I'm seeing is I call it AI 101, document processing and data capture. It's just no brainer. Leveraging AI to ingest data we are in a very unstructured environment, non-standardized environment, like capital call notices, subscriptions, and invoices, and move away from manual entry and errors into AI-based automation. Another one that I mentioned earlier is exception-based. Again, machine learning models flags unusual transactions or discrete accounting conditions, valuation outliers, and reconciliation breaks immediately, rather than focusing on understanding what the breaks are, going straight to the resolution with AI. And the last one is from AI-based, what I'm seeing, and that kind of aligns with Matt was talking about from LP expectations, is LPs are expected to have a dialogue with their data, right? Not just get these financial statements, quarterly reports. With AI, with data coming together and having a dialogue with your data is one of the key things. And one thing we didn't mention is blockchain. I will be very quick in there. still early phases. I see some fund admins leveraging, but I think there's a lot of technology, good technology with blockchain that private equity can use, especially in bridge loans, getting to the basically straight to the lender and moving away from the red tapes and those 5 days, 6 days of trying to acquire that 2 minutes, basically at the end of the day.
Yeah, and you may have heard my to make another pop culture reference, the wrap it up button rang a little louder than I expected there. So I'm going to skip some of the questions that we had planned around regulatory standards and influence, some of the risk management piece, knowing that all these integration points that we're passing back and forth, there's a lot of best practices in play. Obviously, reach out to the folks at Alpha, reach out to the folks at Petra or my colleagues here at FIS, and we'd love to talk about those risk management pieces, the regulatory standards. But I want to allow everyone to get 30 seconds of a closing remark, what you heard today, what you'd like to say. Adam, I'll start with you. If you can kind of give a summary of what you'd like to talk about today.
Yeah, sure. I think, over the last, we spoke a little bit about the last decade changes that we've seen, a push towards co-sourcing. We really think that true to our model of being flexible and really trying to adapt, and I'd say especially on the credit side, as there's new structures, new products, new needs that continuously come up, really just making sure you understand how that impacts on the operational and fund administration side, as when you bring on retail, evergreen, more liquidity and different approaches, there's work that goes into seamlessly integrating on the back and middle office and really leveraging service providers and experts to help to take advantage of that. I think can help to build a really scalable model.
Perfect. Yeah, Matt, over to you.
Yeah, no, I mean, I'd say, again, more and more firms looking to outsource, particularly in the US, as a way to really effectively grow and scale their businesses. Just encourage all of our GP clients to do the right level of diligence when they're out there selecting new service providers, new technologies, et cetera. Really be thoughtful about defining your oversight model or co-sourcing model or whatever it is going to be. Spend the time and energy up front to really think that through holistically.
Great. Thanks, Matt. Thanks for your time today. Josh?
Good, thanks. I mean, from where I sit and as we were growing, one thing that we, are adhering to a lot and what we found to be helpful is maintaining consistent framework. So you can have variation, but you should be, I don't want to say copy paste, but something that's recognizable that you can double down on and teach down onto a new group to grow and explore more. So, the importance of consistency, I'd say incorporating lasting standards, adopting standards at high practices and helping the organization evolve with regulators. Effective risk management, that's always going to be in the place of where we are. So having consistency and validation processes. We're in a world of minor errors, big issues. So it's document errors are going to impact a lot of stuff. AI automation, make sure that there is no spelling errors, right? The smallest errors are the ones that they recognize. It's harder to pick out an error in a waterfall, but it's easy to say that, that's not underlined or the cash symbol's in the wrong spot, right? I mean, these are the minor issues, big errors. If you do that, what else are you going to do? How do you do that? It's the importance of checks. So you really have to have a confluence process internally using automation, leveraging seniority, not about you do this, you do that, but whose job is it to sign off on what? Seniority should be based, where am I sitting in this procedure to make sure that the, process gets to the end, right? And where we are all taking a validation process within that. And then, identifying a framework that can kind of assemble people to hold each other accountable and stuck up for the standards of their firms, individually and as a whole.
Mm-hmm.
Yeah. And Farhat?
All right. From where I'm standing, the private equity fund administration is definitely evolving. It's no longer just processing behind the scenes. It's helping GPs, it's helping LPs to move faster, stay compliant, and get better insights at the end of the day. With the structures becoming more and more complex, which we just went through with hybrids, tighter timelines, higher expectations from not just from GPs, but LPs. Admins are moving into technology to run things smoothly and scale. I think scalability is the most important impact over here. It's definitely exciting times from fund administration and private equity, to be honest with you, and we are just starting.
Like you said, it's a journey. So thanks everyone for joining today. I think I've properly shared on my screen the upcoming calendar for additional events. We'll have some additional webinars that you'll be hopefully joining with myself as the moderator. If you're looking for some jokes for circa 1998 or so, come back for more. But yeah, we'll have Dan Cates and Adele from FIS joining Jen Jackson with the investor experience on July 2nd, and then further we'll have Farhat back and John Z along with Amanda from Alpha to talk data strategy and really deep dive more into the AI and what we talked about, some of the AI concierge things that we're doing on our side with from the FIS perspective. So thank you everyone for joining. This was great. I really appreciate
Yeah,
your time.
great group. Thanks everyone. This was awesome. Appreciate it.
Thank you, everybody.
Yes, sir.
Thank
Take
you.
care. Thanks, Paul.
Cheers.